Okay, so when someone says they're approved, pre-approved, pre-qualified, whatever, it can mean one of several different things. There are different levels of mortgage approvals that I'm going to walk you through right now so that you know what's what, when they apply, and the differences. A lot of people use these terms interchangeably or call some things differently. Now, I'm going to call them by names you might use, or you might not use these ones, or you might use them in a different way. But anyways, this is how I call them. But regardless, there's about 4 different levels of approvals used at different times to notate different milestones having been reached. So just remember, when you've reached the first couple ones, it doesn't mean you can go out and buy a boat. You're not done. You're not like fully approved yet. So just be careful. But number 1, there's something called a verbal approval. Now, this is nuts. This really might only work in like rural areas of the country, like North Dakota. Nothing against the Dakotas or anything, but I have heard of these actually being able to be used there. I don't know how a seller agent would ever take this. Basically, they consist of just a conversation from a buyer to a loan officer. There's no credit pull. You just tell the loan officer, I have this much money coming in every month, roughly this credit score, and then I have this much saved up. They would then give you a hypothetical approval based on that, but that's not anything with any depth or real substance. So again, don't think that's even usable. Number 2, it's called a pre-qual or pre-approval. This is when you submit full application or go over a phone application with the loan officer. You have your credit run. You give a verbal on assets and income. Just tell them how much you're making hourly or based on salary or commission every year. Some of these pre-quals or pre-approvals, the loan officer does want to see a little bit more bank statements, W-2s, pay stubs to get a little bit more certainty on what you can be approved for. That's mostly used for pretty much all offers on homes where they print a certificate from Fannie Mae and Freddie Mac to say that you're approved. They've run it through, that loan officer has run it through their automated underwriting system in the server at Fannie Mae in Georgetown, DC, and Freddie Mac in Tysons Corner, Virginia. Then the number 3 type of approval is called an underwritten approval. This is where you've not just done the number 2 part, the pre-qual, the pre-approval, but you've actually sent a complete documentation file to the underwriter. The underwriter has seen all your financial documentation, checked your credit score, and then you're formally approved by that underwriter for your credit, income, and assets. And they give you what's called a commitment letter. Usually this happens after you go under contract because you do already have that pre-qual or pre-approval. But you do need this to pass your financing contingency eventually. And then after that, there's a 4th level of being approved. It's called your cleared to close. This is when not only do you have that commitment letter in, as in the number 3 level that we just talked about before, but now all your third-party items have come in. Your title work has been approved. Your homeowner's insurance is verified. Your appraisal works out. The value's there. Verifications of employment have come in, and absolutely every last piece has all been reviewed by the underwriter, and they say you are totally good to go. And then eventually you can close pretty much right after that. But that's it. Those are the 4 things, in my opinion, of the different types of approvals. And then you could say 5 is when you actually close. But it's never all final until it's actually closed. But thanks for watching, and let me know if there's another topic out there that you would want me to cover for you. Thank you.